Look at the number of CEOs that are selling everything. Look at the CFO of Discover Card just sold all his stock. Look at Jeff Bezos just sold, I don't know, a lot of stock, $1 billion worth. Look at Zuckerberg from Facebook. He's selling a bunch. Why are they all selling? What do they know is coming?
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for January 29th through February 5th, 2024, while supplies last. This week we have silver Valcambi or Asahi 100-ounce bars at just $1.39 over spot per ounce. We also feature pre-1933 gold $10 and $20 Liberties at $89 over melt and $139 over melt, respectively. Next, backdated 1-ounce silver maples are at $3.75 over spot with a minimum order of 50. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We are always glad to have this weekly returning guest for our weekly market update. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us this Tuesday, January 30th, 2024. Andy, thanks for coming back on Liberty and Finance.
It's nice to be back again, Don. Again, thanks for having me.
It's humbling. Quick little test for everyone here. How many times has any of us either written or said 2023 when we meant 2024 in the last month here? But anyway, this is the second to last day of January. We better get it right before February rolls around. And glad to have you back, Andy. Our viewers always look to you for your insights on many things because you bring a unique philosophy and your own investigation to that. But certainly, I like to call it bricks, bullion, and banks because you help us keep an eye on several factors that people aren't hearing enough about on the mainstream media, the mainstream financial press, government statistics, etc., or their personal financial advisors. Basically, everybody that they're talking to, for the most part, for most people, are not alerting them that there is a clear and present danger to their financial future. We're here to try to help to fill that gap, and you're a big part of that. So if you could maybe bring us up to your latest research that you've been doing on things that are transpiring both geopolitically or financially in the world that you believe are relevant to people who want to be aware and prepared need to know about.
It's interesting that you say what you did, Dunnigan. I met yesterday with a family who is in the top 30 wealthiest families in America. And they own a very large retail operation, grocery store chains. And I met with some of the family members and had a long conversation. And these are people that are highly educated, incredibly successful, very articulate, very sophisticated. And it was interesting to me that they saw me on a podcast I did and had invited me to their home. And it was interesting to me that they didn't know what a bail-in was. They didn't know what the Belt Road Initiative was. They had very little idea of what BRICS meant. And it was very, I think, emblematic, if you will, of the statement that there are so many people around us that are very well read, that are very successful, that are very intelligent, just reading the wrong things and not paying attention to the right things. I had a conversation with someone who watches these shows, so I'm not going to mention that person who they are to me, but they know who they are. And the conversation was, can you believe how many military-age men we see at the border that are appearing there with clean shirts and several of them carrying wheeling like a small suitcase? And the person says, I've never seen that before. And I wonder, what are they watching? And I walk away from that conversation or from others thinking this country's in trouble because so many people have no idea what's coming. So many people have no understanding of how severe some of these things really are, some more than others. I mean, we've let 12 million people into this country. And as I said last time, I don't know if I said this to you or not, but if 0.2% of those people have poor intentions, it's 24,000 people, and that's just 0.2%. I think when we realize that there are 200 meetings between today and in October meeting in Russia, 200 BRICS meetings, separate BRICS meetings, that's like every other day. And then the big one in October and an election in November. Do we really think that this is going to be smooth sailing. And what's really eerie to me is the quietness in this retail market, where we got hammered over the last few years. Let's call it the front edge of the hurricane, and we are squarely in the center of it now, the eye, and it's quiet. We've done some very large deals lately, but the volume is substantially off from what it has been the last several years in normally sized deals. And I don't know if that's dumb luck, or maybe there are sophisticated people out there who see some things coming. And I use sophisticated not in terms of the way we always expect it to mean. I use it in terms of sophisticated in terms of macro events. Or let's just say, people who understand where we are. And there have been some inordinately large deals that we've done, but the volume is way off, and it's eerie. It's quiet. And when you look at what's happening on the wholesale level, when you look at what's happening in Shanghai on the LBMA and COMEX, the ETFs, all bleeding off product, it makes me wonder, how many people really understand what's coming at them. And I have this narrative that I continue to talk about that I see accelerating faster and faster and faster. Let's talk about a few of them and add it to what we talk about week after week after week. And again, look, I don't know. I don't want to say I'm sorry to anybody, but I am sorry for being repetitive. I am and I'm not. I'm sorry for being repetitive and following a chain of events that I've married my ideology to, because I do believe it is the most important thing. And although there are external factors that we should talk about, and I try and touch on them, most of the periphery is noise to me. It's the big picture that matters. And the de-dollarization that we continue to see, to me, is very alarming. We talked about how the United Arab Emirates made the provocative move of saying they're not going to trade in dollars. When that materializes, I'm not quite sure. And we talked about how they are the 7th largest producer of oil in the world, and they are an OPEC member that was just admitted to BRICS here January 1st. They just yesterday, the day before, completed the first ever digital transaction made directly to China through the mBridge platform. We've talked about the mBridge platform for over a year. And that mBridge platform, think of it as a bridge that allows central bank digital currencies to trade with one another outside of the SWIFT system. Now, do you think there's any coincidence to countries wanting to be able to transact with one another outside the SWIFT system? I don't. This is how all of the countries are sanctioned. When the West imposes sanctions, they are locked out of the SWIFT system, which is the oxygen, if you will, to be able to transmit money from entity to entity. And these countries are hell-bent on finding a way to transact their own currencies, their local currencies, outside of the SWIFT system. This is the first ever transaction made directly to China from the United Arab Emirates, who just said they're not going to take dollars anymore, who was just visited by Putin right after they made that announcement, who hasn't left the country but twice in 2 years because of the sanctions. You can see things in every corner, if you look closely enough, are accelerating. And I think that this mBridge platform is something we'll hear more and more and more about as a way for the BRICS to end reliance on the dollar through digital methods. We saw a very interesting article. How many people know that that Hong Kong or that China bought the LME, the London Metals Exchange, a few years ago? Now, they kept that quiet. A lot of people don't know that. But now we're talking about warehouses in China that are going to be holding industrial metals. Now, the article didn't talk a lot about precious metals. I'm sure that's next. But when you talk about metals traded on the LME, this has been a very strategic aim of Hong Kong and of China to control all of the world's commodities. I believe that this is something they have done methodically, and they are working on them. All of the relationships they're working on, like with the United Arab Emirates, center around trading in local currencies, ultimately maybe in a BRICS currency, but has to do with commodities. They bought the London Metals Exchange, and now they're going to be warehousing metals that are trading on the LME in China. Little by little by little by little, logarithmic decay, the infrastructure is being put into place. And I'm going to be a little bit all over the place here because one of the things that I try to do is just find stories that are newsworthy. And there are a lot of things that I find newsworthy, and you can stop me at any time. I found it interesting that when we talk about inflation, that's been a hot topic lately, right? Inflation. and the CPI. And we always talk about how the numbers that John Williams presents at shadowstats.com is a much better and more accurate reflection of what inflation truly is. And when you look at, there was a chart that I found on Twitter the other day, or X, I guess you would call it. And it talked about the M2 money supply. And it showed a chart from 1959 to 2023, every single year. And every single year from 1959 until 2023, every single year, the money supply expanded. And if you add the numbers together, it averages between 6 and 7% increase in the money supply every single year since 1959, with the exception of 2022, which saw a 1% decrease in M2, and 2023, which saw a 2% decrease in M2. And you saw the ramifications of that as things start to really get tight, and the banks and the economy are starting to reel. And well, lo and behold, we see M2 up again today. It's been creeping up here lately. It is an election year after all, but I think that when we talk about a real level of inflation over 61 years of averaging roughly 7%, I think people need to understand what real inflation is, because inflation is not the rising prices that the CPI tells us is at, 3.5% or whatever. It's more a reflection of money creation. In 2020, the M2 increased by 25%, in 2021 by 12%. So we've seen literally for, over 60 years, the money supply increase little by little by little every single year. And do you really think that after all of that time of increasing the money supply, do you really think that they're really going to get tough on inflation? Or are we going to, was this just an anomaly, so to speak, to quell what became inflation that got out of the way? And I think what you're seeing, or inflation that got out of hand rather, and I think what you're seeing, people are realizing that U.S. bonds are not a great investment in an inflationary world where the United States money supply has grown at 7% per year over the last 50 years. So, it's debatable, I guess, if the CPI, at 3% is real or not. But the reality is the debasement of the currency is running at 6 or 7%. That is the truth of it. And when you talk about what inflation is, it's an increase in the money supply, period. And the rising prices are a symptom of that. I think it's very interesting to understand that, the government, I believe, is not, look, they'd like to see inflation go away, but, it's not going to happen. I mean, it's just not going to happen. I think they've chosen the markets over the dollar because, it's the lesser of two evils. The whole thing will blow up. Since the debt crisis ended, and the debt ceiling crisis ended in June of 2023, U.S. debt is up over $3 trillion. And that's the U.S. government borrowing $10 billion per day.
Yeah, I want to just interject because I've been keeping some notes, and I will jump in a minute, but this one is too good to pass up. When you said that the debt crisis passed in the middle of last year, that's so ironic because that's the way that most people look at it. Oh, we got through that somehow. They moved the barricade out of the way, so now there's nothing in our way. It's like that's when, out of control, we have no plan other than to just pedal to the metal, destroy the currency, has been and take on exponentially increasing a hockey stick of debt took hold in a very real way. And most people's take on that is what they're being told, and that is that the crisis is over. When in fact the crisis is just showing itself now.
Yeah, we've raised the debt ceiling, I don't know, like 79 times, and some crazy number like that. And the way that we continue to do this, it is something that obviously isn't lost on the world. But look, when we talk about inflation moving forward, first of all, the Shanghai shipping costs just spiked 400% from 1,000 to 5,000. In other words, to bring goods from China to the United States, now they have to go around the Cape of Good Hope. They're not going through the Suez Canal, and it's a situation where we are witnessing the cost of shipping go way, way higher. Well, go back to 2020 during the pandemic. What was the cause of all the price inflation? It was shipping. It was logistics. It was the supply chain. Supply chain problems are just getting started again. And look, if the Fed cuts rates, which they may do here in the next day or two, it'll be blatantly clear to me that the Federal Reserve is maybe the most political Federal Reserve ever. Because, look, a nation with $34 trillion in debt, almost $200 trillion in liabilities, $500 billion in trade deficits, and a trillion in interest payments, cutting rates when they're double their target, they're closer to 4% than they are to 2%. This is a problem. And inflation is not going away. In fact, I would argue that inflation will be a very big problem moving forward. And I think that's something people kind of have lost sight of. This is something that, again, all of these things, I think, come back to why you're seeing de-dollarization, why you're seeing all of these things happen around us. There are rallying cries everywhere. And, and just to show the idiocy of the market, the Treasury says, well, we're only going to borrow $760 billion instead of, $55 billion higher than lower than they had expected. And so the market throws a party. I mean, think of how absurd that is. We're only borrowing 760. And, it's below what Wall Street thought. It's below what the street thought. And this is largely due supposedly to higher net fiscal flows. That's taxes, right? So they think that there'll be higher the taxes will make up for the loss of or the less amount that they need to borrow or bonds that they need to issue. And my guess is that just like they did with the labor numbers, remember 2023, all we heard about how good the employment numbers were. Well, quietly, hey, by the way, we were 440,000 jobs off, 40%. Sorry. But you don't really hear them yelling and you keep hearing all these pundits say, well, the employment numbers are so great and inflation is so great. We're being lied to everywhere. So the lying with the employment numbers, I mean, if you look at the number of CEOs that are selling everything. Look at the CFO of Discover Card just sold all his stock. Look at look at what's his name? Jeff Bezos just sold, I don't know, a lot of stock, $1 billion worth. Look at what's his name? Zuckerberg from Facebook. He's selling a bunch. Why are all of these big time?
Yeah, Jamie Dimon did his first sale only ever. Yeah.
Why are they all selling? What do they know is coming? And so the numbers that we're being told, I believe, are make believe, and they are, I think, putting us into a position where I believe they will come back and revise all of these numbers. They will revise and they'll end up borrowing more in the second quarter, and everything gets revised, and everyone is acting upon the news of the day. But you look at the way the BRICS are doing things in a very methodical, drawn out, plotted fashion. And that's why I think when things finally do snap, this is why I talk about logarithmic decay. All of these things that we talk about, in and of themselves, they have significance and meaning, but put it together to a bigger whole, to the possibility of countries just seriously tired of the way that the United States conducts itself on the world stage, and the way that we are mismanaging the reserve currency, the way that we are living beyond our means, and how hypocritical the world views us to be. And these are the rallying cries that are bringing all of these countries into the fold. And I just think this is kind of why I continue down this path. Just a couple other things, I guess, worth talking about. Let's see here. Other than really the gold and silver commitment of traders, that's something I really just glance at once in a while. I guess I would just simply say gold right now is at 226% in terms of percentage of ounces versus bars in circulation or backing the contracts. It's 226% of all vaulted gold, 499% of registered gold. In other words, 5 times as many contracts as there are bars in the vault backing those contracts. And when you talk about silver, it's up to 1,642% of all registered silver. Again, it was at about 1,590% Now it's 1642. Basically, 1 out of every 17 contracts is backed. The rest is rehypothecated. So this entire system that is over leveraged, whether you're talking the commodity exchanges, and do you think there's any reason why the Chinese bought the LME and are going to be listing things trading on the Shanghai Exchange and listing and holding actual metals, vaulting them for the LME? You can begin to see how methodical they really are. Little by little by little, they are all over the place. And yes, their economy is in trouble, but they have set up an infrastructure that I believe will be able to weather even the worst economic calamity because they are so resource rich and they have made deals around the world for the continuation of accumulation of resources, of precious metals, and they're breaking away from the West. So everyone is in trouble right now financially. All of the countries are not in the best position, but in the end, as Zoltan Pozsar says, the ones who have all the commodities win. He who has the gold makes the rules, and that's kind of it's kind of the direction that I take everything that I take in nowadays, Dunnigan, and I try and look at it from a holistic point of view. But whether we're talking across the globe or here at home, where things just keep on getting crazier and crazier and crazier, like at the border, I ask myself, when is that moment? When is that moment when things really become real? And the calm before the storm right now has everyone thinking that the worst is behind us, that we got through it and everything's going to be okay. Yet the way that I look at things, it may be more precarious than it's ever been on every front. So that's really all the news that I have to talk about. I don't know if you have any comments or questions, but
I'll just add a few things. In addition to Zoltan Pozsar's comment about the golden rule, also we have Warren Buffett's comment that when the tide goes out, in other words, when all the false liquidity that we've all been awash in for 40 years gets drained out, he says, when the tide goes out, you find out who is swimming without any swim trunks. And that's what you're talking about. The exchange is being carved out, the difference that it's going to be between whether you're living in one of the Western financial countries where everything's based on debt, and a house of cards of derivatives, versus in the Eastern bloc shown by the BRICS. Now it's not just Eastern, it's just the whole BRICS critical mass that's forming, that's based on ownership of real things. And ownership is going to be key. One thing you mentioned was about the vertical spike in the Fed balance sheet that happened during the COVID lockdowns. That's been leading, again, another shoe to drop is these massive corporate layoffs that have been going on, tens and even hundreds of thousands of layoffs going on. And that's affecting who's available to buy, who can afford buying real estate, et cetera. Means that a lot of those loans to those corporations are like, we already had a high percentage of zombie companies, but according to John Rubino and others, we have like a record high level, and Michael Pinto, record high level of zombie companies now who can't even make the payments on their debts, and yet they're having to now reschedule those debts at much higher interest rates. And then there was the whole COVID lockdown thing that damaged, it just put tens of thousands, if not hundreds of thousands of mom and pop businesses out of business. And also it started a real work from home trend that means many, if not most, of corporate headquarters are basically standing empty. So we're talking about commercial loan default shoe that's waiting to drop. Also, because of the spike in interest rates over the past year here, you've got bond portfolios held by the major banks that are just terribly toxic, and so there's been Band-Aid measures brought out by the Fed to help paper over that temporarily. But those the leaked video from the FDIC meeting about how they don't want to cause an unintended public panic by mentioning that there will be runs on the bank for people trying to grab what they can while they can, realizing, as most people don't, that nothing in the bank is yours and your deposits really aren't there. And then there's a global real estate crash. We just had confirmation yesterday that Evergrande, a large real estate holding company in China, finally was forced into receivership. The judge said, enough's enough. You're done. And so some people say that could and would be a domino that could start a cavalcade across the hurting global real estate bubble that's been persisting, and people have been holding their breath wondering what's going to happen to the real estate. This whole era of ZERP that we've been in for so long and QE has caused such distortions in investments that we're seeing corporations such as Zillow and others that overbought in the real estate sector, having to sell at big losses their portfolios. Again, a lot of that's being papered over because the Fed is taking on these mortgage-backed security obligations on their books at par and that sort of thing. Then you've got the Israel and Ukraine wars that made the hand was shown by the U.S. with their SWIFT system exclusions and sanctions against other countries, and that's weaponizing the U.S. dollar. You brought that up.
Let me just add one point to that. Now you have the Speaker of the House and the Biden administration, along with the European Union, talking about not just freezing and sanctioning, but to confiscate, to use, to pay for the war because of congressional appropriations drying up. And so all of these things, everything you just laid out so beautifully and articulately, these are all, and that's what I see. I put them all together, and in and of themselves, they have significance. Put them together and they have tremendous significance. And this is the rallying cry. And the only way that I see this working is if they come back and peg some form of a currency to something stable. Now, I wanted to mention one other thing because I had lunch with someone who I respect a lot, Mark Moss, and we talked a lot about my ideas, and he more or less he agreed with everything I said. His one takeaway, he's someone who believes a little bit more in Bitcoin than he does in precious metals, but believes everything I said up until the point where I say they will take gold, which is a tier one asset, and peg it to a distributed ledger for the world to see. And the immutability of it and the veracity of it. And I said that's the way it'll work. He says, well, a distributed ledger, if it's not decentralized, is just a ledger, is something that can be altered and changed. And it's the decentralization that keeps that from happening. And I agree with that. I mean, the urge to change and manipulate would be strong. But, I first of all, I don't think any decentralized currency will ever exist in this current system. It's certainly not as a government backed, because how can you do something decentralized and still maintain control? You can't. So if indeed the central planners stay in control, my idea would have been what I think they will do is use blockchain to show the veracity of what's pegged to it and have it independently audited. I don't know another way to do it without making it convertible. And as Gresham's law says, bad money chases out the good. I just don't see that happening. There's not enough gold. Prices would have to go too high. But using blockchain, using gold at a much higher level, pegging a percentage to it, I think is what they plan on doing. Now, one other thing I'd like to say, you got James Rickards, who has another take to it. And his take is that what the BRICS nations will do is just peg their currency to the dollar price of gold. And they're the ones accumulating all of the gold and producing it all. And so if the United States inflates, the dollar goes down, the price of gold goes up, the BRICS win. If the United States tries to catch up and buy more gold, the dollar goes down, gold goes up, BRICS win. And his idea is just to peg it to the dollar value of gold. And if that happens, they win without doing anything. Whatever it is, I do believe that the tier one revision, the central bank accumulation off the charts, it is going to have some form of a peg or some significance to a new system. And that's why I talk about people doing this, the importance of it, because a lot of people say we had no warning. How did this happen? And if you aren't seeing this, I can't believe it. I mean, it's all around us. So I will continue down this road, and I think something will show itself by or before October of this year. I don't know what that will be. Look, all the finance ministers were tasked with going back to the drawing board and presenting their findings in October, but there's 200 meetings between now and then. And you throw in the election the month after and all of the instability in this country and geopolitically, something is going to break. And the calm right now, this eerie calm, has me a little bit weirded out, I guess you could say. And I'm just waiting for the shoe to drop. So for those out there who understand what I'm trying to do and can put up with my redundancy, please understand that I have a bigger picture in mind. And I think we have to continue to focus on what's important. Lord knows you have so many people like Peter Schiff, who was just on. I thought he was fantastic, and Alistair and Michael Pinto and all of the wonderful guests that you have that present, and Rick present different viewpoints. And that's really what people need to do. Listen to them all, put them all together, and come up with your own conclusion. And that's what I try to do. And no matter how hard I try to get away from this, I can't. I see this as clearly as anything I've ever seen in my life. So it is an honor to be here, and I appreciate everyone listening, and I appreciate you allowing me to do this. It helps that most of what we've talked about has happened, but still, where I add things that haven't happened, where I try to put these together, that's a guess, and it's as educated of a guess as I can get, and I hope I'm wrong, but for what it's worth, I always say, I look forward to riding shotgun with you for the rest of the year and seeing what happens, because I think this will be a crazy year. In fact, I'm betting on it, and I think most people, if they were honest with themselves, would say the same thing.
Yeah, it's the most people comment that I think is a concern to us, because as a preparedness-based community of viewers here, we may be, as you said, preaching to the choir. So some of the people in our audience have said, "Oh, we keep hearing the same message over and over again." But if people would take a step back and take a deep breath and exercise a little empathy and realize, wait a minute, when Rick Rule tells us that 99.5% of investments are not in precious metals or anything related to precious metals, then we have to realize that for every one person who's in here saying, "I've heard this before," you've got 99 people out there who haven't heard it, or for whom it doesn't make any sense.
Yeah, and I'm cognizant of it. Go back and look at what we were saying at the beginning of 2020 when no one was talking about this. And yes, you've heard it before, but at least a lot of what we have been talking about when no one was has happened. And if I'm right, and this does happen, and you see this, look, 30 countries have formally applied to the 10 that are already there. What happens if we have 50, 60 countries? And as Rickards has said, and as I have said for 2 years, that the Shanghai Cooperation Organization and the Eurasian Economic Union join with the BRICS, and now you have 85% of the world and a much stronger military, a much larger GDP, much larger swath of human population, the majority of all the key shipping routes and the majority of all the world's commodities under one central group who has figured out a way to peg something to a currency that has legitimacy all of a sudden. And when we talk about, last thing, I know we wanted to speed this up, we talk about a bond market. Well, who's going to trust, where are the bonds? The U.S. the bond market in the United States has been a shamble, and out of nowhere you have the BRICS issuing the first ever bonds. They are BRICS denominated bonds, the Maharaja bonds, $28 billion in bonds. It's the first attempt. But the continual chipping away, like the Project M Bridge, at the settlement value of the dollar is going to have ramifications on the reserve status of the dollar, as are whatever the interest rate shenanigans that we see and the bond problems that we see and the indebtedness problem. And I think if you ask a guy like Peter Schiff, he would tell you that what we see coming is a sovereign debt problem. And that's a whole different ball of wax that this country is not prepared for. And that's when you see the bonds no longer wanted. And that's a big problem, that you either monetize the debt and the Fed buys it all, and maybe that's who's buying it in the Cayman Islands. Otherwise, we're supposed to believe they're one of the largest holders of our treasuries in the world, or we default, or we hyperinflate, or we find a villain. We're getting to that moment. So anyways, I won't do this anymore. I've said it a couple times lately because I'm aware of that. I'm aware of my redundancy, but I will tell you, the little boy who cries wolf said the same thing, and at the end, the wolf came. And I just want people to be aware that, to me, there's nothing more important than this. So thank you for that. As far as specials this week.
Yeah, I was going to ask you about that because, as Gregor Mannarino tells people, as you watch the system devolving and going off into crazy land, he said, become your own central bank. In other words, don't be a victim of the fragility of the banking system by owning real things. So you help us with that each week. And what real things have you got?
So we're still doing the $10 and $20 Liberties extra fine grade. And I will tell everyone, if you're buying gold at these price levels, I don't think there's a better buy. And these are coins that are, a minimum of 100 years old, and they are circulated, but in very nice condition. And it's over their melt value. The melt value of a $20 gold piece is 0.9675 of an ounce, just a hair under an ounce. And if you take 0.9675 and you divide it by 2, you get 0.48375. That's a $10 Liberty. 0.48375, just under a half ounce, and 0.9675, just under 1 ounce. The price of the $10 Liberty is $89 over the 0.48375. So you would take gold spot, multiply it times 0.48375 for the $10, add $89. You take gold spot, multiply it times 0.9675, and then add $139 for the $20 Liberty, and you'll find that you're going to be at or lower than the price of a brand new Gold Eagle half ounce or 1 ounce, or real close to it. Amazing coins, and my favorite way to own gold, period. As far as silver, we are also still sticking with the the backdate rather. Silver Maple Leafs at $375 over spot. And then probably the best value I've seen in over 4 years for bulk silver, and those are the Valcambi and the Asahi, both name brand 100-ounce bars, brand new at $1.39 over spot. It is the least expensive I have seen them in 4 years. So for a large purchase, or just trying to preserve rather than have the smaller pieces for trade or whatnot, it's as good of a value as I've seen in a long time.
Well, Andy, thank you for that as always. And folks, if you don't want to miss a single episode with Andy, I'm going to be redundant here. Make sure you go to libertyandfinance.com. Just go libertyandfinance.com, put your name, your email address, click submit. Make sure you confirm on the confirming email, and you're on our free mailing list. We won't share it with anybody, except you will get every interview with Andy and every one of our other guests and the weekly specials in your inbox, 1 email per day. We don't spam you. Andy, as always, on behalf of all of our viewers, just thanks for joining us here for this weekly market update on Liberty and Finance.
Pleasure is mine. It's a true honor to be here, Dunnigan. I hope you have a great rest of your week, and look forward to catching up with you real soon.
Thanks, Andy. Blessings to you and your family.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for January 29th through February 5th, 2024, while supplies last. This week we have silver Valcambi or Asahi 100-ounce bars at just $1.39 over spot per ounce. We also feature pre-1933 gold $10 and $20 Liberties at $89 over melt and $139 over melt, respectively. Next, backdated 1-ounce silver maples are at $3.75 over spot with a minimum order of 50. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.